Like I'm streaming movies, I push the button, it's live on my phone. I want music, I push the button, it's live on my phone. Social media, I click the button, it's live on my phone. Finance is the only time I'm like, send my friend money and it happens in 72 hours. It's the last horizon of click button actually happens. And in order for that to work, we have basically reinvented finance on blockchain.
When DeFi and crypto happened to me, just like it would have been the experience for everyone in the space, the on-chain transparency was something which was in your face. The roadmap for large financial institution adoption for DeFi and blockchain rails comes into play. There are things that really need to be fixed. One is privacy. The other is composability or interoperability. When different large banking financial blockchains have to talk to each other, and they are essentially different chains of sorts, which may be private and permissioned, but then you need a public chain in between to enable all of them. And this is exactly what the Canton Network has been building ground up from first principles. We're going to be diving deep into multiple aspects of the Canton Network, and especially why it's crucial for institutional adoption of DeFi, with Eric, one of the co-founders of the Canton Network. Hello, Eric, and welcome to Alpha Unhashed.
No, thanks for having me.
Eric, let's dive straight in and demystify the Canton Network. It's even for folks like me who've been in DeFi, is that it's not something new. There's a lot of work which has been going on since quite some time. So let's dig into what really Canton Network is about.
Yeah, I mean, let me try to give you a simple overview to start with, and you kind of direct me where you think I should go a little deeper. But the headline is that Canton is a public permissionless network with privacy. And there's a lot of subtleties about how we achieve the privacy, and there's a lot of really interesting differentiated technology features that make it really suitable for mainstream adoption for RWAs and stablecoins and the likes. But I'd say it came out of nowhere because a lot of people just didn't realize that this has always been our vision. For the past almost 12 years at this point, we've been building for public networks for real world adoption. And our big delta to everybody else, other than some of the features, is really just how we came to market. We came to market by delivering useful software to these large institutions first, proving that it works, getting lots and lots of feedback from them, many product iterations. And when we started to get demand from them to start to connect to each other, then that was really the catalyst for going forward with launching the network connectivity capabilities of the protocol. So I'd say that our long-term vision is really not so dissimilar from what most of these other public chains will say, but we've taken a much more, let's say, what I call inside-out motion, starting with the core institutions at the center of finance, making sure that the tech works for them, and now pushing our way further and further out towards DeFi and peer-to-peer use cases. So the go-to-market is the biggest difference.
Right. And obviously it's very clearly financial institution focused. It's about bringing all the banks and FIs on chain. So the architecture is that there are private permission chains that all of these banks will have separately, which I think, I don't know, in your parlance, do you refer to them as subnets? But technically, if you refer to them as subnets, Canton becomes like a protocol or a chain which enables all of these private permissioned chains to connect and talk to each other. Is that how one should understand that?
No, I don't think that's quite right. I mean, I understand why that is the perception, but maybe we'll work off something that you're a little bit more familiar with. Think about like a Polygon or a Cosmos or an Avalanche that has, a whole development kit and ecosystem around people building their own subnets, or think about ETH and all their L2s. In our opinion, the fundamental flaw of all those technologies is that there's no composability across all those subnets and sidechains and L2s. And so it's not one network. It's kind of more a capability to build many of your own private chains. And really, no, what we're focused on is that you build one network and that the network is permissionless. Within that, just use the internet as your own sort of analogy and guide. That the internet is a totally permissionless protocol, but it doesn't mean I get to access every website on the internet, right? So it's that kind of experience of there's one public permissionless network. There are many things in it. Some are more permission than others. And the only thing I would say that I would kind of vehemently disagree with that you raised is that we're not a network for institutions. Again, that's been our go-to-market because our general thesis is that even something as hugely disruptive to humanity as the internet, and then I say that in a positive way, it didn't disintermediate every bank. Stripe and PayPal emerged and they were incredible and they are incredible. And there are many other things like that have emerged. Amazon has emerged. Lots of things have emerged, but also JP Morgan got a lot bigger. So it is not a everybody wins, everybody loses type scenario. And in many cases, like this sort of what I would consider, totally bullshit mantra of we're going to decentralize everything and we're going to do peer-to-peer money and we're going to completely disintermediate everything that ever existed. They all access these networks today through large institutions, whether that's a crypto exchange or a really large wallet ecosystem. They are being intermediated to the network. It is extremely rare that somebody takes the protocol's core wallet, downloads that and runs that on their own machine or server and connects completely sovereign themselves to these networks. They are being intermediated. Now you're being subtly directed into this DEX instead of that DEX. You're being subtly directed into this stablecoin instead of that stablecoin. But you are unequivocally being puppeted into something and intermediated into something. Maybe it's not your principal counterparty the way that maybe a prime broker might be. Sometimes it is, if you're dealing with a prime broker. We have basically reinvented finance on blockchain and all of the roles and responsibilities that we have today. Our goal is not to pick DeFi or TradFi. The network is for everybody. And it's just really that we have a large concentration of TradFi because we're the only chain that could meet their requirements today. But we have a growing and burgeoning ecosystem of DeFi as well. And really our goal is to level the playing field, to make it possible for anybody to provide these services in a safe, compliant way, and really make finance work the way that it should work in the first place. We're kind of the last industry. Maybe this isn't I haven't done a full survey, but it feels like we're the last industry where when I push the button, it doesn't actually happen. Like I'm streaming movies, I push the button, it's live on my phone. I want music, I push the button, it's live on my phone. Social media, I click the button, it's live on my phone. Finance is the only time I'm like, send my friend money and it happens in 72 hours. It's the last horizon of click button actually happens. And in order for that to work, I guess in theory, we could just build a completely parallel economic system to the one we already have and everybody move to that. But that seems incredibly naive to us. And it's much more likely that the technology enables us to have incumbents that win and new entrants that win, provided that they have an equal footing and an equal opportunity, and that what they're providing to the market is actually better, not just faster, actually better. And that's where all of our focus goes into. And so I think there's just an overfit on all these other ecosystems on, decentralization and kind of permissionlessness at every layer. And I just don't think that is really the right perspective on how the end game starts to look.
Okay. So decentralization is not the core idea, but obviously
Well, no, again, it's at the right layer. So if you go into an ETH ecosystem, I kind of have this kind of go-to example, and I don't mean anything negative by it. I just think it's one that a lot of people are accustomed to. So do you remember when there was all the Tether FUD, and everyone's like, oh, they have, they're completely out of money, and the little bit of money that they do have is trapped in Chinese paper, and it's going to zero, and the whole reason Bitcoin is rallying is because Tether just keeps minting fake USDT and using it to buy Bitcoin on the exchanges. Right? Like that was a really big narrative not that long ago. And, what I always like to ask the sort of like ETH maxis are, let's just pretend for a moment that that had been true.
Mm.
What value did 1,000,000 validators confirming that Sri sent me 100 USDT provide to me as a USDT holder? Absolutely nothing. It did not change the trust relationship inherent between me and the issuer. And like, this is the thing where people just kind of pretend that this is a panacea. Oh, I'll have some pseudonymous pool of economically rational, in theory, actors decentrally validate my on-chain actions, and thus everything's safe and everything's good to go. And I think that that is the big misconception. There are times when that is additive. There's no doubt about that. There are times when that is not supportive of your goals. But if you have one configuration for everybody, everything has to be the same. Everybody has to interact the same way. Everybody has to adhere to the same governance. Again, if you use the internet as a case study, that is just not the way that the internet grew. That's not what made it successful. And so we reject this concept that every layer has to be maximally decentralized and that that is the optimal configuration for what someone is doing. The network has to be decentralized. Governance needs to be decentralized. You need a credibly neutral ecosystem. You need to be a place for all. People need to be able to do whatever they need to do, but you also need to give the tools to institutions and large entities that need to be fully compliant and configure certain things different than others and set, their permissions in a different way than other people. And all of those things are valid, and all of those things need to coexist, and all of those things need to be composable. And like it's like so easy. And I think that that's really the shortcoming of the design of almost every network that's alive today, is that it's so easy to design for the two extremes.
Yeah.
Everything is maximally decentralized. There is no compliance. It doesn't matter. Get used to pseudonymous, non-deterministic pool of validators. We're coming to eat your lunch. We're going to redo everything. You can't stop us. And like the other end of the spectrum is, everything's a private permission blockchain and fully centralized. And just neither of those are the answer. Neither of those are the answer. And because there's no uniform answer for every participant in the world. But you need to figure out a way to kind of give those properties that people want to each of them, let them configure it, let them find it in the ecosystem, deploy their contracts against the way that they need to, and then have them be able to coexist. And that's really the whole idea of Canton is, a public permissionless network governed in the right ways, credibly neutral. And yeah, there's going to be pockets of stuff that are hyper centralized, and there are things that are super decentralized, but they coexist. And I think that that's a much more responsible approach.
I like the fact that you're not taking a maxi position in this. We've seen that people tend to take these extreme positions in this. The reality is that it's a continuum, and there will be a coexistence of not just how decentralized structures will be, but also the coexistence of how TradFi systems currently exist and how DeFi will intermediate a lot of that. But going back to,
it doesn't have to be TradFi. It doesn't have to be TradFi. I mean, think about the incredible reach of MetaMask right now, right? Like it's wrong to call that anything other than a financial institution, not necessarily like your bank, right? I'm not saying that they need to be licensed like a bank. I'm not making any sort of, really nasty sort of statement around this is clearly your bank, they should be licensed. I just mean, for all intents and purposes, your financial access to these ecosystems and your ability to interact with them is being intermediated by this software. That is a financial institution of some type. Coming through Coinbase, coming through Binance, same thing. And so they're all, like it or not, if we think that this is a huge multi-trillion dollar, ecosystem for real, and that these are real companies with worth billions and billions of dollars, those are institutions. I don't know how else to say it. There's no avoiding that reality. And those are intermediaries. And maybe not in the exact literal sense that like Satoshi talked about it, but it's just such a I think a misconception that we're all accessing these networks directly ourselves.
But perhaps this sort of analogy of comparing MetaMask with Coinbase is not quite all right. MetaMask can't switch off your access.
Yeah. No, I'm not making, like I said, I'm not making any statement that it's not safe to use it. I'm just saying that, my experience is being curated by somebody else. What's being emphasized, what I'm being directed towards, all that stuff. There is a silent hand of a company directing me in a certain way.
Yes. Right. Okay, so coming back to Canton, and there's obviously this whole philosophical umbrella, and we will come to that later on. You obviously are fixing one major institutional requirement, which is around privacy, and the other one is really composability across institutions. Once you do that, and maybe you could shed a little bit of light around the DAML structure that you have for fixing that, just at a high level to understand, and also shed some light on what is sort of your view on, let's take a half a decade perspective on how much of the Canton usage will be more interbank versus users actually accessing apps that connect to the entire ecosystem underneath. So there are two parts to that.
I mean, I think I'll start with the second one, which is just that I expect a very robust and healthy mixed ecosystem of activity. I mean, already in the network today, I think over the last 24 hours, there was around $3.25 million of fees in the network. And to the best of my knowledge, that was overwhelmingly DeFi in the ecosystem. I think that blend will shift over time. And kind of the way that we think about our go-to-market motion is that we are first and foremost focused on growing the amount of activity in the network. So think of like the way that a company would think about top-line revenue, right? So absolutely have to drive more activity in the network. For all Canton coin holders, activity translates into burn. All fees are burned. The more activity, the more burn. We've already burned over 5.5% of the total issuance of the network to date. I think that's greater than anything else in the crypto ecosystem from a burn perspective. Again, I could be off, but that's the best of my knowledge. So the number one priority is just to drive as much activity into the ecosystem as we can. But just like any other company in the world, again, Canton's a network, not a company, but in this analogy, the quality of that revenue matters a lot. And for a company, they might think about margin, but we think about the durability of that activity. So to kind of give you two ends of the extreme, meme coin trading obviously was massive, but then also disappeared. NFTs was massive for a period, but also disappeared. It's not clear that those things are durable, long-term, reliable activities. And it's not clear that the market should give a good multiple to those types of fees. Now, on the flip side, things that never miss, payroll never misses. Like we could have more or less companies based on the state of the economy. We could have more or less people based on the state of the economy, but payroll doesn't miss. That happens all the time. Bank financing and repo, that happens every single day and arguably should start happening around the clock, 24/7. You have stuff that is reliably happening constantly. The quantum of it can ebb and flow a little bit in notionals, but the amount of activity is constant. So our focus is making as much durable activity in the network happen as possible. And so that the quality of what's going on in the ecosystem is extremely high. Now, I personally think that a lot of the DeFi stuff is not the highest quality from this durable perspective, because DeFi is still quite experimental. Even things that are doing great, like Aave, I still consider to be fairly experimental. I mean, obviously, the numbers are incredible. I'm not taking anything away from them, but I don't yet know that is going to be the preferred way that people get yield on their on their savings accounts. Maybe it'll be demand deposits and it'll be through my traditional banking relationship. I think it's too early to say one way or the other. So we do service those things, of course, because I'm not in the game of like predicting the future. But where we put a lot of our effort and time into, and those things that are known, reliable, durable use cases. And that serves as the base for the health of the ecosystem. So, it's a long-winded way of saying that, like, I think that we will get periods of time where DeFi activity dwarfs TradFi activity. And I think there will be periods of time where TradFi activity dwarfs DeFi activity. But our job is to kind of merge those two worlds together so that, it's not so binary. It doesn't look like A versus B. And the second thing is just to make sure that even if we do get that ebb and flow, it's on the margin and that the base is constantly growing in a very reliable sense through these extremely durable use cases. And to the first question about, I think you asked a bit of a technical question, right? I mean, how is DAML structured? Is that right?
Yeah.
So I try to take a step back and remind people that we've been at this for a really long time. And still to this date, I'm not aware of really any high-level programming language built for privacy with privacy primitives in it. So when we sat down, Canton is first and foremost a formal definition of a ledger model. So what should this network behave like? How should the protocol work? What are the properties of it? So it's more of a formal spec to begin with. Mm-hmm. And then you have two sides of that coin in the spec. On the, you can call it the bottom side, that's the implementation of the ledger, the implementation of the protocol, the Canton Network. And then on the top side, that's the implementation of the language to build apps for that protocol and that network. So DAML is a language that we built to give a lot of inbuilt tooling and a really great developer experience to build apps for this type of network. And, a lot of people will ask, well, why didn't you use the EVM? Why didn't you use SVM? Why haven't you used Rust? And, what I think is that, well, first off, we were ahead of a lot of these things in many respects. The EVM was and still largely a very dangerous thing to write programs in a distributed setting. But in particular, it doesn't have concepts of privacy, global composability across different zones. It just doesn't have these primitives that are inherent in Canton. So that's one. And two is, generally speaking, every developer is a polyglot these days, even more so now with the, all the LLM tools that help people develop stuff. The harder parts are the architectures. Like when people started building web apps, it wasn't, the language for it wasn't hard. It was just like, oh, this is a totally different paradigm. When people started building stuff for ETH, Solidity's pretty ergonomic and straightforward, but people didn't really know how to build for this type of architecture. When Solana came along and it had all this, low latency, high throughput, asynchronous workflows, people weren't accustomed to how to build for that model. So it's not the language that's ever the reason. And in fact, the language is built to make it easier for you to participate in these new architectures. So there's a lot of built-in features in the language that help you build and test and prepare for this protocol and help guide you through a new architecture that is oriented around the concept of privacy. So there's a lot of effort going on to extend Canton to be multi-language supported. And, we welcome there's a big community of people working on that sort of stuff, which is awesome. It's really, really additive. But the DAML decision, was always about making it productive to build for a new architecture and to make sure that that was safe for users to do so.
Okay. So if I'm trying to see how to make a comparison with the from an understanding perspective, from a technical lens compared to EVM. So let's say we've got ZK in EVM for privacy, and through DAML you have your architecture which addresses that ground up. Similarly, for cross-chain settlements and liquidity aggregation. There are bridges in EVM, not efficient, and there are a lot of issues. We are all familiar with that. And there are protocols like, let's say, Layer 0 or CCTP, which are kind of coming up to fix that as well. So how does DAML compare as an analogy to address cross-chain and privacy if you were to look at the EVM panels?
Yeah, well, I mean, listen, I'll echo my co-founder Yuval. He said something the other day that really made me chuckle, but I agree with him. No one's really solved privacy outside of Canton. There are a lot of people talking about solving privacy. There are some really early attempts to try to solve privacy, but I would argue that we are still the singular example of it actually working in practice at scale. So I would say it's the other way around. I think you should be asking them how they compare to our working use case. But being kind of chirpy aside, there are some really important deltas, and I don't know that I'm going to be able to touch all of them. So keep me into task here.
Mm-hmm.
So there were kind of roughly two categories of questions that you had in there. One is around comparisons to ZK, and the other is around cross-chain interoperability. So let's start with the second one first, because I think that that's a little bit more straightforward. 4 years ago, if you would have asked that question, what I'm about to say would have been like, I don't know, debated for some reason, but I think finally people have just acknowledged that this is true. There is no composability across chains. None, period. I can use Layer 0 and Link and all these things to transfer assets across chains, and I can use Near to help coordinate multi-chain updates, and I can do some interesting cross-chain stuff, but it is not transactional. It's not atomic. It's not composable.
Agree.
And what that really means is that the best we can do with that technology is recreate the same problem that we have today. We don't have composability across multiple different applications in finance today. If I want to do something at Chase at the same time as Bank of America, I don't have the ability to guarantee the transactionality of that update. Now, obviously on the L1, I do, right? Like that's what DeFi is. DeFi guarantees the transactionality of these multi-leg updates. And that's what's so powerful about DeFi. It's like, wow, there's no operational risk in what I'm doing here. And that is the hill that we die on Canton. Like anything that would change the protocol, if it in any way interferes with global composability, it's something that will not make it into the design or into the code base. Because that, in our opinion, is the singular technological advancement in blockchain when it comes to what's different here versus anything else that we've had before. We've had immutability, arguably better versions of immutability. We've had decentralization. We've had BitTorrents, we've had PGP, we've had every single thing here. The whole recipe of incentives in tech was what's super interesting. So it's not like there's a major tech advancement, but what we've seen really emerge as the definitive incremental property that we get in blockchains is this composability element. So within Canton, you have composability globally, period. No bridging, no forced standardization at the app layer across multiple things. I could take two completely independent apps with very different data models. I can compose updates across them. We preserve privacy through that composition. So, think of it this way. When you go to the doctor, if you were to pay with your JP Morgan coin, you don't want the doctor to find out how much money you have. You don't want the bank to find out why you went to the doctor, right? So when we do composition, we maintain privacy through composition. And, we can go cross-chain the same as anyone else. I think Layer 0 is going to go live in about a month. Chainlink looks like they're imminently going live. So, we'll be able to do cross-chain stuff just like anybody else. There's no special magic to that one way or the other, honestly. Like, I think that I think that ironically Layer 0's decision to create an L1 is kind of really the strongest confirmation of what I'm saying here. It's like ultimately I think that we will not land in a multi-chain world. I don't think that is the long-term horizon. We'll be in one for obviously a longer period of time still. I don't really know what the transition looks like, but I think ultimately we don't end up in a multi-chain world or a very, very limited number of chains. So because composability, again, like it's not because I'm like, oh, we're so much better or that's so much work. I'm not making any sort of judgment call about the quality of these different ecosystems. I'm just saying that ultimately Composability is the draw. And the system that can capture composability across the broadest ecosystem of stuff, I think will be the winner. And that'll be the sort of critical mass. And nobody has that yet today. But the cross-chain stuff doesn't have composability. And so I just don't think that that'll long-term survive. On the ZK, here again, there's a bit of a nuance to it, but we have a bit of a semantic argument when we talk about privacy. ZK is really about anonymity when it's used for privacy. So 99.9% of the stuff using ZK today is using it for scale. Cool, no problem. In very limited applications, ZK is being used for privacy, and FHE as well, being used for privacy in some limited applications. And let's start first and foremost. The problem that they're solving is around anonymity, which is a very different problem than what we're trying to solve. So when you look at something like Zcash, it's this original Satoshi, vision about, boy, wouldn't Bitcoin be better with privacy, but we just don't know how to do it, right? And that's definitely true. If you're trying to create borderless, censorship-resistant, government-resistant money, anonymity is an important property to get right. So for cryptocurrency, adding zero knowledge, adding FHE, I see that as incredibly, incredibly additive. But when you start to talk about a stable coin or a treasury or an RWA, anonymity, I think, is almost worse than complete transparency. Just imagine a scenario. I've said this a couple times, but I think it tends to resonate. JP Morgan calls the regulator and they say, hey, great news. We just installed an upgrade on our bank accounts. I have no visibility into how much money my customers have or how they spend it, but a black box tells me it's okay. It's kind of a laughable, idea, honestly. And when you start to talk about, oh, well, yeah, but you could do data disclosure and prove that and all this, but yeah, and what you've done now is you've started reinventing the Canton protocol, which is about selectively distributing data, those parties receiving it, confirming it against the update. You're starting to develop something that ultimately just looks like Canton. So yeah, I don't have any problem with the idea that eventually the application of ZK plus protocols on top of it to selectively disclose data could work. It definitely could. You're now just basically describing Canton. Now, that all assumes that ZK and FHE work, which we've proven in production they often don't, which, again, as a Zcash guy, I'm totally comfortable taking that risk on my Zcash because it's a cryptocurrency. That risk reward is fine. If I'm a stablecoin issuer, the ability for someone to just arbitrarily mint some of my assets and me to never know is existentially terrifying and something that I would never go anywhere near. So it doesn't solve the right problem. It doesn't have the right capabilities. And the tech is still a little bit not quite there yet and has these existential risks in it. I don't really think ZK is ready for prime time on things above and beyond places where the risk reward on the cryptocurrency are worth it. And in the meantime, Canton uses tried and true data segmentation. There's no fancy crypto here to achieve privacy in Canton. Like Sri, like my favorite thing to do is to ask people, what's the safest way to protect data? And a lot of them would be like, it's encrypted. And I go, cool, Sri, give me your phone, lock your phone, give it to me for 7 days. Like people are like, oh no, I'm not gonna do that. Right. And so really this idea of like selectively replicating data to only the parties that should have it is really the best approach. And again, if someone built that protocol on top of ZK to selectively disclose and distribute data and confirm it, I'd be all for it because, again, they're just reinventing the Canton protocol. So, again, a lot of very pragmatic decisions, and they're based on first principles and ground up design as opposed to I already deployed a network that is entire integrity is based upon full replication of all data to all validators and participants. How do I add privacy to something that's fundamentally built to be completely transparent? Yeah, now you need, magic pixie dust unicorn crypto to bail you out of a bad architectural decision. And maybe that will happen with the fullness of time. But, even then, it's probably not solving the right problem. And then you'll have to build a whole nother layer on top of it anyway. And in the meantime, Canton works today. So, why wait?
All right, that's a strong argument. Uh, how effective was this argument in onboarding the first institution onto Canton? How difficult was it for you to convince somebody on the other side of the table? And when that, what was the turning point?
Yeah, I mean, the emotion we experience most often, in my opinion, is relief, because what's going on in the stablecoin ecosystem is really incredible. It's really crystal clear, the value prop of cash on chain, and its application is just exploding in every direction. So if you are a financial institution, you cannot ignore it. You have to do something. Right, so that just kind of sets the context. You ignore Canton completely for a minute. Wow, stable coins are putting us in a position that I have to do something. Okay, then you start to dig in and you're like, okay, well, maybe I would use it for my own flows, but if I start to use it for my customer flows, now I'm exposing all of their information to the entire world. And now they're between a rock and a hard place. They're existentially threatened. Their business, they have to do something. They have to participate. But participating would be deeply irresponsible. And they're very stuck. And then we come in and we go, well, actually, no, it's cool. You can participate today in a completely responsible manner. And they're like, oh, it's relief. It's like, oh my goodness, great, let's go. So that to me is really, really like sort of the what's happening right now. I mean, your question was, what was it like a long time ago? We've had customers in production for 5 or 6 years on Canton in various different ways. And, large institutions going first is not normal. So, it was long sales cycles and lots of prove it and lots of hands-on help and all that sort of stuff. But, all positive from our perspective, because it improved the product in many, many ways, understanding those really hard requirements and what were non-negotiables and what they were worried about and what they're thinking about and what they have to say to their legal team and their compliance team and their risk team and all that sort of stuff. Like just getting that exposure heavily informed a lot of the design decisions in the protocol. So that's the positive of the friction of onboarding these large institutions.
Okay. And did that happen over a period of time, or it started happening fast once you guys were fully ready?
I mean, we've been moving people into production for, like I said, the better part of 6 years. We've been working on all sorts of projects for a long time, and we've been at this over a decade. So it's been a process that the pace has certainly picked up, without a doubt. The pace is picked up because of that sort of composability network effect that I was talking about before. So if you're a bank like a JP Morgan or a Bank of New York and you want to bring digital demand deposits to market, well, you want to deploy it where people are trading trillions of dollars of repo, which is where Canton is. You want to deploy it where people are settling commodities trades at scale, which is what Canton is. You want to deploy it where life insurance policies and mortgage underwriting and all that sort of stuff is happening. That's on Canton. So if you're thinking about entering the game as an institution, your peers are usually your first, line of interest, because they're already onboarded with you. You have all the right legal paperwork. You understand how it goes. And if it's a way to it's a better mousetrap, then that's an obvious sort of no-brainer. So it's a really easy place for a lot of them to get started and start to scale. So that network effect is really taking hold right now.
Okay. And who would be the largest volume transactions? Which institutions would be the top 3 on the Canton Network?
So by what, notional or frequency? Like that's kind of the bit that what's the dimension that you're interested in?
We could look at both of them.
So from notional, you have things like Broadridge's distributed ledger repo platform, which is doing, I don't know, somewhere, it oscillates around, I think, 250 to maybe as much as 400 billion a day of US Treasury repo. They have a pretty healthy bank ecosystem of entities trading repo there. So from a notional perspective, that's certainly the largest. There are others in the ecosystem around physical commodity settlement, life insurance, home loan underwriting, lots of things along those lines as well. But repo is just such a huge notional, product that it's hard to kind of catch up in the notional sense. On the volume and fees and activity, we have a couple apps on the mainnet that are the very first versions of DEXs and AMMs and CDFI, and those are doing really well. Those are doing really, really well. Like I said, there's somewhere in the order of around $3 million of fees regularly, and that's all being driven through these really clever on-chain privacy-preserving advancements in DeFi on the Canton side.
Okay, all right. And the DTCC is going to be tokenizing USTs on Canton Network. Is that already underway, or where does that stand? That's the first part of my question, and I'll get to the second one after
that. Yeah. So the DTCC is in progress. There's lots of work going on a daily basis, working around the clock to help make that happen. There have been a number of pre-trades that have led up to that moment. So I think, just announced the fourth example of a trade. It was more involving international products, but this model of working with the CSD, getting the local government bonds, trading against cash on ledger in various forms, stables and deposits, that continues to progress. Really nice working groups, pretty diverse ecosystem of cash on ledger, ranges from large bank deposits to stable coins, both very mature and well known to relatively new upstart stables, and we are working around the clock to make that happen as soon as possible. So that's very much in progress.
So once that happens, once treasuries get natively issued by the DTCC, Canton, so what happens to all the RWA platforms that are tokenizing treasuries today?
Well, I don't think that it's like necessarily competitive. Is that your question? Is that the heart of your question?
And maybe just take a step back. Will the issuance be natively on Canton, or again it's going to be a repo structure in terms of being tokenized on Canton?
I think the better way to answer that is that it is a legally binding, perfected security. A lot of people get hung up in the mechanics of how that happens, and I don't think that that's really what matters. Again, at the end of the day, the most important outcome is that is a legally perfected secured interest in the asset. Okay. So that will be a legally binding on-chain position. So yeah, that's that will be the outcome of that work. Mm-hmm. And yeah, I mean, from the competitive standpoint, look, I think that there's a real advantage to using the DTC treasuries generically speaking. So you'll have the fungibility across other DTC members and their customers. So that is obviously an incredible value add to users. But there are probably opportunities for members to digitize their own holdings and use in different contexts. And, so like, again, from a privacy perspective, I can imagine scenarios where a member may want to protect the information of what's going on an omnibus account to just them or just their customers, right? And so in that case, using your own version of it versus the DTCs might be additive. But I don't think these things are competitive in the sense that, there's going to be one that rules the world. Again, that's kind of the way that a lot of people think about these open networks. It's like, okay, there's going to be one asset. That's the asset. Everybody uses that asset. I'm a lot more focused on the heterogeneity of these networks and how these things complement each other and play off of each other. Again, there's like a lot of religious debates about stablecoins or demand deposits. Permissionless, securities versus KYC security. Like I don't think there's an answer. There's an answer for the use case and the application and the purpose. and that all these things should coexist. And again, the composability element will just improve the liquidity through all of them. So, I don't think it's the end for everybody when the DTCC goes live. I think it's more the beginning of something very interesting for everyone.
Okay, all right. So we opened up, you were very clear that this is not a zero-sum game, and I can see that thread through. So that's something refreshing to hear. What's been your biggest challenge through the last um, walk me through your earlier life a little bit, and how you arrived at this whole vision for Canton along with your co-founders, and obviously I know you've been in the space with DRW prior, and DS, so walk us through a little bit of that.
So I think a lot has been, let me put it this way. A lot of people try to pretend like you have this vision at the outset and like you just kind of figured it out and you nailed it. It's just not true. Like every day we get some concern or, objection or run into some headwind, and that just kind of subtly or not so subtly adjusts your path every single day. We recognized very early on a few things at the meta level, but then we've been very much guided by the reality on the ground every step of the way. So at the meta level, we recognize that public networks are the long-term destination, because that's where you get the most heterogeneity and connectivity and composability and network effects and value to everybody. Rising tide floats all boats, sort of a thing. We also recognized very early on that privacy was going to be a threshold issue, and solving for that correctly was going to be an unlock for the ecosystem. There are maybe another dozen-ish like things that are a little bit more subtle and not sort of topical yet, but we think are also incredibly important. And we've talked about composability a lot. And so like we kind of have these meta themes that have always been relevant to us, and, in the context of solving specific problems and trying to achieve those ideals and outcomes. But the exact path is largely dictated to us, based on reality on a daily basis. There's kind of no avoiding reality. The old sort of misattributed quote to Tyson, "Everyone has a plan till they get punched in the mouth," sort of a thing. That's the daily reality of this stuff. So, I try not to pretend like, any founder is a, messiah or has it figured out. I think it's definitively not true. I think there's a huge element of luck and manufacturing luck by being in the game and working really hard and being receptive to the bumps in the road. But yeah, I mean, high level public networks, fixing finance by removing all its operational problems and resiliency through composability, the ability for institutions to adopt it and whatever we have to deliver for them to be able to do it without losing your vision. And then, a million fights a day, sort of a thing.
Yeah, awesome journey. And what's your vision for sort of the next, like I said, like I was asking, half a decade or a decade? What's the sort of roadmap for this medium and a longer term? Do you want to be the chain which brings, everybody's has spoken about getting Wall Street on chain? Do you want to be the definitive people to be claiming that spot?
So we just want to continue. Like, it's kind of like what I said to you before. I try not to create these like headline like we're gonna win XYZ. Like I'm just trying to drive as much value into this ecosystem as we can on a daily basis. Our guiding light, our guiding principle is to make sure that we're growing the network. We're growing the network in ways that are long-term durable, that are solving real problems, that have high utility. And as long as we're doing that and we're working with the right partners, then that creates its own momentum. It has its own gravitational pull. We don't ever ask for any form of exclusivity to Canton. We don't ever think like, hey, you should only work here. Those conversations never come up. We think that we're complementary to a lot of other ecosystems in other ways. We do everything that we can to just make sure that we're focused on outcomes and utility.
Enjoyed the conversation, very grounded in reality, and really looking forward to how everything pans out. We're at kind of really this point of inflection in many ways, and where DeFi stands.
Yeah, thanks for having me.
Yeah, and enjoyed the conversation. Thanks, Eric.
All right, have a good one.